Are you planning to buy a home in 2020? What are the pros and cons? Needless to say, this year is the year we will remember in history. Prices of essentials and basic necessities have all gone up, except petrol and houses. This year has proved to us that having and owning a home is more than just a necessity. It is life. It is safety. It is security. It is comfort. It is relaxation. It is family. It is contentment. And even if houses are considered essentials, prices surprisingly have gone down. With favorable interest rates, take this opportunity to find which home captures your eye. But let us help you and guide you through the process. Julia and Associates is just a phone call away. We have buyer virtual tour program available where you can relax in the safety of your abodes while we look for properties that will tailor fit your needs. Buying or selling? First time buying? Not enough credit score? Need help with your financing? Don't know where to start? Not familiar with the area? Buying versus renting? Need insight about rent to own? We will help you make a sound decision. Trust our expert advisors with Julia and Associates team. Call us at 404-886-0566 or visit www.viewhomesinnorthatlanta.com.
Good afternoon, everyone. Thank you very much for joining. My name is Julia Di Sosa-Rocha. I am an associate broker and the team leader with eXp Realty. I'm here with our preferred loan officer, Dave Williford with Homestar right now. Dave, good afternoon. How are you?
Good. How are you?
Good. Thank you. Okay, so are you ready to start our first virtual buyer workshop?
I'm ready.
Okay, wonderful. Yeah, we are usually doing it live, and we get together in our office, and we have multiple buyers coming in, and since most of us are working from home right now remotely, we've decided to be consistent and help and assist our buyers and just do it virtual this time. So for those who just joined, thank you very much for joining us today. And guys, I know that we're going through transitional time, and some of you, I really hope that all of you are actually staying safe and healthy and going through this pandemic, through COVID-19, being in the good state of mind. And I know that we're going through some uncertainty, and we just need to be strong and have faith. I think having faith and strong will and know where we are going, what we are trying to create is very important right now. And we are here to help and support you as much as we can. So let me give you a little bit overview of how our meeting is going to look like today. So I think we still have some people who are joining us. Let me make sure that I am letting everyone in. No, I think everyone is good. So after a quick introduction, we are going to talk about the economy, what is going on. Then our preferred closing attorney is going to join us and tell us what changes have happened in the closing industry overall. Then I will tell you and show you the roadmap of how a real estate transaction for home buyers looks like from the beginning until the end, show you the roadmap and what to look for, what to stay away from. Then Dave will talk about the financing part, and in the end, you will have an opportunity to ask any questions you might have. And if we are not clear, maybe we are using some terms that you are not familiar with, feel free to send us your questions in the chat, and we will be happy to answer these questions for you. Okay? So let me share with you my screen right now. And we will get into the presentation. Can you see my computer screen right now? Dave, can you see?
Fine, yes.
Okay, perfect, wonderful. Okay, let me tell you a little bit about myself. Okay, I've been in the real estate industry since 2004. I got my real estate license, and in the beginning of my career, I was working for New Homes America for 5 years. Specialist in the beginning, and then when we've seen like 2008, 2009 market crash, I have transitioned into foreclosure and being a foreclosure and short sale specialist for a while, and I've started my team in 2015. Right now I am with eXp Realty, and I've joined this brokerage last year, and we are more cloud-based virtual brokerage. I'm glad that I did this transition last year. It is just perfect timing for what we are going through nowadays. Being in real estate and practicing real estate for the last 16 years, I've been fortunate to work with first-time buyers, with relocation buyers, with more like on the luxury home side, and as I mentioned, foreclosure, short sales. I've done those as well, this is a little bit about myself. Let me to move this on the side so you guys can see it. Yeah, this is the overview. In 2010, I've joined the multiple million-dollar producer club, and literally, like, you name it, I've done so many transactions, and helped like thousands of clients throughout this year. Let's see. Why? Okay. Okay, it will pass. So here is like why you would like to work with my team, and actually, like right now, having the team. By the way, let me tell you, I have 5 agents on my team. Let me just discontinue.
We have made several attempts to reach you. This is your final courtesy call before we are unable to lower your credit card interest rate. Press 1 to speak to the member services department.
Okay. I apologize. It is my office line. Okay, yeah, I have several assistants who are helping me, 5 agents on my team, and I have a couple agents on my team who have joined our call right now. Dave, before I go further to the presentation, tell us a little bit about yourself and how long you've been in industry, and tell us a little bit about yourself. Dave, please unmute yourself. We cannot hear you.
That better?
Yes, we can hear you right now.
Okay. Well, I started in 1995, so I've been in the business for 25 years. Back when I started, they didn't have credit scores. You had to know how to read credit without credit scores. And I'm older than dirt in the business. I've done everything from processing to underwriting to branch management, and landed at Homestar, and I love it here. It's a great company, and I don't plan on moving from here until I die. So I'm very happy with this company. I've seen a lot of companies, and Homestar is the real deal. We really do take care of our customers, and they take care of me. So good situation here, good company.
Okay, wonderful. Right. So let me share my computer screen with you again. Let me give you a brief overview about what makes us a little bit different from any other brokerage in Atlanta metropolitan area. Since I've joined EXP last year, I went through their extend training, and I got the certification being a smart home buying specialist. We have a special strategy. And to give you an idea, like average real estate nationwide and in Georgia including is selling about 6 to 7 homes per year. My team and I, we sell about 70 to 80 homes per year. So we definitely have quite a lot of experience. When we start working with our clients, we use the satisfaction guarantee program. So what it means, if for some reason our clients are not happy and not satisfied with our services, they have a free cancellation guarantee program. And also, if they are not happy with the home that they purchased using our services, we have the guarantee program to help them sell their home for free. We also have the immediate access buyer advantage program that our clients have access to. And of course, on the top, they can take advantage of our 16 years experience in real estate, helping them to negotiate the best deals and looking for their best interests. Here is the slide with some testimonials from our clients. Let me show you the roadmap of how the real estate transaction overall looking like. So the first step for us usually is to schedule the preliminary appointment consultation with our buyer. Usually it is face-to-face. Right now we are leaning towards more virtual face-to-face appointment. We are scheduling the Zoom, Skype, or appointment via Hangouts, where we are sharing the our camera with our clients, and they see our face, we can see their face, and we're asking a lot of questions and just explaining them how the process would look like for them. Once we go through this consultation, we go into the pre-approval stage in case if our clients are applying for financing. And this is when we refer our client to our preferred loan officer, like Dave Williford. We have established relationships with him. We've been working with him already for several years, and he is one of my favorite loan officers so far. Very responsible, very detailed, knowledgeable, and always willing to help our clients. And what I like about him, and it doesn't matter what price point he is working with, it can be 100,000 loan or 1 million plus. He is treating people fairly and giving enough attention to everyone. And if there are any challenging loans, sometimes we come across those, he is still there to help clients. And especially right now, like going through this time of coronavirus, we see quite a lot of buyers losing their jobs, and they have challenges qualifying for a loan. Maybe because the guidelines and qualifications have changed quite a lot. This is when buyers need extra attention and help from the loan officer. And actually, before I jump further, Dave, I would like you to tell us. Actually, I see that Barry is about to is ready. Barry is our closing attorney. He will be giving us a little presentation because he has to go to the closing, as far as I understand, after 12:30. So Barry, I will let me stop sharing so that you can talk. Barry, can you please unmute yourself that we can hear you?
Sure.
Okay, wonderful. Great. Hi, Barry. Good afternoon. How are you?
Good. Thank you. Thank you very much. Hey, Dave. Hey, Julia.
How you doing?
Good seeing you.
Yep.
Yes, Barry is our preferred closing attorney. He's with Parkway Law Group. Thank you very much, Barry, for joining us today. I
Thanks
know
for
you're
having me. Thank you.
busy right now.
So yeah, I'm a closing attorney with Parkway Law Group. We've been working with Julia for years now.
Yeah, almost 10 years. I think at least 10 years already. So yeah.
Yeah. And thank you for everybody for allowing me to hop in. You too, Dave. It sounds like Julia was about to introduce you. So thanks for just letting me hop in real quick.
All right.
Yeah, so I'm a closing attorney. For you guys who might not know, you will see us at the end of the closing process. You'll see us after you've signed your contract, after you've gotten with a lender like Dave and worked through all your loan application and everything like that. So my role in the closing process is reviewing the title to make sure that title is clear, that there are no liens or anything of that nature. In the title process before you get ownership of the property. Also, we coordinate with realtors like Julia in making sure that we receive all the contract documents. That way, when it comes time for closing, everything with regard to the numbers on the transaction are accurately reflected on your settlement statement, and also to make sure that any kind of contract conditions are satisfied before you as the buyer take ownership of the property. Another party that we cooperate with are lenders like Dave. So Dave's people would send us the loan documents. We would make sure that everything gets properly executed at closing with you, the buyer. And then also our responsibility is making sure that the documents that need to be recorded are sent to the courthouse before they're returned to us and forwarded to you or the lender. Right now, we're in the middle of a health crisis, as everybody's familiar with. But surprisingly, things are still moving along with us so far. So the only thing that's really different about the closing process because of the coronavirus and the shelter-in-place procedures are that we are now doing more what we're calling virtual closings. And the way we do them are similar to how we're doing this meeting here. We actually use Zoom meetings a lot to make these happen. I think a few other applications that are available are Microsoft Teams, and I think maybe some other people are using Skype, but Zoom is probably the one that we use the most. So the way it would work is, we would schedule a Zoom meeting with you as the buyer after we get all of the loan documents from the lender. And we would email your loan documents and any other closing documents to you in advance. And you would print them out, or the other option would be for us to overnight hard copies to you so you could execute them at the time that we set up the appointment. You log in like this, you'd be able to see me, I'd be able to see you. In addition, I'd have a witness and a notary who would log on. That way we could satisfy any witness attestation requirements for any documents that need to be recorded. And that'll be it. And the process usually takes about as long, maybe an hour. That's probably about an average that I've been seeing with lender documents, sometimes a little bit faster. And then after we finish the signing, then we'd make arrangements for you to return the originals back to our office so we could send any documents that need to be reviewed by the lender to them, and then record the documents. And that's it. It's a pretty easy process. Like I said, it's not very different from how we're doing from closings, except that we're not doing them face-to-face. We're just doing them through audio and video communication technology now.
Okay, very good. Great. So as far like fraud and like, can you talk about it a little bit? So like, what buyers should really be aware of while they're getting ready for the closing, Barry?
Yeah, sure. So fraud, of course, is a pretty big issue that we have to deal with in the real estate industry. Uh, the item of probably biggest concern is wire fraud. So if you are sending earnest money to us, the best way to do that is through a wire transfer. It's fairly quick and it's pretty secure. The safeguard that we ask buyers and anybody who's sending money to us to take is to confirm the wiring instructions with us before you release your money through the wire. So the way it works is once we receive the contract, one of our paralegals or pre-closers will email a copy of our firm's wiring instructions to you, and then you'll open them up, and then you'll go to the bank, or if you're able to initiate a wire transfer over the phone with your bank, you'll make sure that you call us. The number is on the wiring instructions. Call us in order to confirm the routing number and the account number for our bank, and also the bank name, to make sure all that information is correct before you send your wire. Because the problem we've been having over the past few years as technology has advanced, especially with regard to editing PDFs and documents, is that fraudsters are intercepting emails between law firms or even emails between real estate agents and their clients. They're altering documents and then sending fraudulent documents to the party who's supposed to be sending the wire. And there have been cases that have happened where somebody's initiated a wire transfer to the wrong person and not lost all their money, but lost the entire wire amount. So again, in order to avoid that kind of issue, we always ask that you call us to confirm our wiring instructions before sending a wire. And then the other possibility for fraud, I think, would relate to maybe identity, as we're doing these virtual closings. So what we require is that you email us 2 very legible copies of ID. And then once you send it to us beforehand, usually we request that you send it directly to the closing attorney. And then when we log in for the Zoom meeting, what we'd have you do is hold up the ID to the camera so it can be seen. Because when we do these Zoom meetings, we record them and we store them. That way we can compare the ID in the person's possession with what we received over the email, sort of as a way of cross-referencing to make sure that we're dealing with who we're supposed to be dealing with.
Okay. Okay, understood. And maybe tell us a little bit about, like, do you think that it is important to for the buyer to invest into the title insurance? Because this is one of the common questions that I ask.
Yeah, a lot.
Go over the insurance that is required by the mortgage company and this one-time title insurance. Yeah.
Yeah, absolutely. So title insurance is, I think, a very important thing for buyers to pay for. And I think Julia is correct in calling it an investment. I buy it on all my properties, but what it does in a nutshell, it guarantees your ownership in the property. It's not like hazard insurance where you pay a recurring monthly premium or even a biannual premium, I suppose that would be. You pay it one time. And what it does, it protects against any kind of problems that may occur with regards to the title. So you don't have to pay out of pocket to resolve those issues. So some issues that title insurance protects against are claims on the title to the property from somebody who may have a claim from earlier in the chain of title. For example, say for instance that earlier in the chain of title, there was a security deed that somebody signed in favor of a lender, similar to what you would sign in the closing. The security deed gives a lender an interest in the property. In Georgia, security deeds are actually an absolute conveyance of title. So it's a pretty big deal. So if somebody had an open security deed in the chain of title and that was never canceled or satisfied, then that lender could come back and say they own the property and try and take it. So with title insurance, what you would do is you'd file a claim, and then the title insurance company would bear any cost in defending title and making sure that ownership remains with you. Whatever the cost is, the title insurance company has to take care of that because you paid the premium. If you didn't have title insurance, it would be up to you to pay attorney's fees or anything else in order to defend your title to maintain your ownership in the property. Title insurance is based on the sales price. For owner's title policies and for lender's title policies, it's based on the amount of the loan. So the important distinction there is that there is lender's title insurance and owner's title insurance. Owner's title insurance only protects you as the owner. Lender's title insurance only protects the lender's interest in the property. So, for example, if you were to decide that you didn't want title insurance, if you have a lender, you'd still have to pay for lender's title insurance, but that lender's title insurance policy would do nothing for you. So those are the distinctions, and those are kind of the things that it does. And if you want a more in-depth discussion about title insurance, I'd be glad to cover it with somebody via email or phone call.
Okay, perfect. Okay, thank you very much. Guys, do you, I see the question on the side, how much that title insurance typically costs. Okay, you just answered pretty much this question. Okay, if they have any additional questions, Barry, what is the best way to reach out to you?
Yeah, you can call me on my office line at 404-567-4557. And my email address is Barry, B-A-R-R-Y, @parkwaytitle.com. I'd be glad to answer any questions.
I will put your email address in the group chat right now so people can see it. Okay, wonderful. Any other questions, guys, before Barry will disconnect the live stream right now? No. Okay, Barry, thank you very much. We really appreciate your participation and joining us today. Thank you very
much, Julie. I appreciate it. Bye, Dave. Thanks for letting me borrow some of your time, and everybody have a good day. Thanks. Bye.
Take care. Okay, bye-bye. Okay, let me go back and switch to our share page, to the presentation. That was very good. Okay, probably, Dave, I will let you, since we are talking about the pre-approval part, please tell us what is going on with in the mortgage industry right now. Like there are a lot of changes that I've seen in the last just couple of weeks, and what is happening with the interest rates? Are we in recession already? And how soon we should expect to recover after we all get back to the like after lockdown? It's kind of like very different. So give us a little bit more information, what we should expect and what we're going through and how it is going to affect the lending process and the real estate market overall.
Well, what's happened so far is that the coronavirus has caused major problems in the mortgage business. One of the things that's happening is a lot of people are going into forbearance. 20 million people filed for unemployment in the last month or so. That's a lot of people that lost their jobs. A lot of those have applied for forbearance, which is basically we're putting off your payments till later on. That's not forgiveness. You still have to make that payment, but we're going to put it at the back of the loan. So 30 years down the road, when you think that loan's been paid off, any months you put it in forbearance, you'll still be obligated to pay. But what's happening is that the servicers that service these loans, they have to make payments to the investors anyway. The servicing company, what they do is they buy servicing rights to the loan for about 1%. And every year they make about 1/3 of a percent, about 0.30, about 30% of 1%. So it takes them about 3 years just to break even. Mm-hmm. And they collect the money every month and they send it on to the investor. and they have to send that money whether you make your payment or not. So if your payment's $1,400 a month, you miss 2 months, that's $2,800 that servicer did not receive, but they still have to forward that money over to the investor. So you can see how if a bunch of people go into forbearance and stop making their payments, the services are going to be hurting. The government's stepping in and trying to stop that, but it's really hard because some of the companies that service loans just won't qualify for the fix that they've been given, which is basically a short-term loan from the government to keep them afloat. That after this is all over with, they'll have about 7 months to pay. So that's kind of keeping things going. One thing that I get a lot of questions about is, okay, the Fed just lowered their rate to 0, and what did that do to mortgage rates? Did it lower them to 0? And the answer is no. The Fed rate and mortgages don't have anything to do with each other unless you're on an adjustable rate mortgage, and the Fed rate can't affect what the change is on your next payment or a rate change. What keys on mortgages or what drives mortgage rates is mortgage-backed securities. When you close your loan, it is actually sold to an investor, and they're put into big pools like 10 million or a billion each, and they're sold on Wall Street as mortgage-backed securities. And it's the mortgage-backed securities that drive your rates. So if they're doing well, people are buying those, then the rates tend to go down because the value of those goes up. But what's happened lately is that because of the problems with the mortgage business and people getting laid off, investors are afraid that we're all going to lose our jobs and stop making our payments. So they kind of pulled back a little bit, and the Fed stepped in. First of all, one thing that happens is when the stock market crashes like it did before, people park that money, they take it out of stock, they sell that stock off, and they park that money in bonds, treasury bonds, mortgage bonds, and all the other bonds out there. And usually when they do that, that means rates go down. So when the stock market crashed, what should have happened is that rates should have gone down, but they didn't. They actually went up a little bit because to fund that $1 trillion stimulus bill or $2 trillion stimulus bill that we put out that's giving us all our checks. I got mine today, by the way. They had to fund that somehow. And the way they funded that was they made treasury bills, which are bonds, and to the tune of $2 trillion and flooded the market with treasury bonds. So this time, when everyone parked their money over in bonds, and the rates didn't go down because they had flooded the market with bonds. Now there's just way too many bonds on the market, and it's just not having the same effect. So what they're doing now is try and keep rates down, and it's working so far. I just don't know if it's sustainable. Is that they're actually buying the mortgage-backed securities on Wall Street every day. They're going to buy like $1 billion of those, $1 billion worth of those today. They've been doing that about 20-30 billion a month since it started. So that's raising the price of the bonds and lowering the interest rates. So that's not sustainable. So we do see rates eventually going up here. It's not going to be a permanent thing, but we do see it going up here. The other thing that's happened is the investors have kind of backed off of buying loans with lower credit scores or government loans with lower credit scores. So anyone with a less than a 660 score may have an issue with their rate. The way rates work is that either a rate pays you money or you pay money to get it. Sometimes we'll see what's called a pro rate. That means you can take that rate. It doesn't pay anything. It doesn't cost anything. But normally, most days when I go in and check the rates will either cost something or they'll pay something. Right now, for a 620 credit score borrower, just to get a decent rate, it's costing you 4.5 points. Those are discount points that you have to pay to get that rate. The tricky part is that the law will only allow you to pay 2%. So you can pay 2 of those discount points. That leaves 2.5 that someone else has got to pay, the lender, or the seller. Really, those are the only 2 that can pay that. So that's where getting closing costs paid by the sellers become very important these days. And if you've got less than a 660 score, if you have less than a 660 score and the seller is not going to pay any closing costs, you're not going to be able to lock your loan because the seller has to pay those additional closing costs unless I can come off the lender credit, which that's not going to happen right now because our yields are so low that we're we're actually losing money right now in a lot of loans. Brokers can put in a little money too, but there's just not enough there. You're going to have to get, seller's got to kick in basically. So what would happen is you would pay 2 discount points, the seller would pay 2.5. We could lock your loan. When you're over a 660 score, we're not having that problem. And the problem we're having with people less than 660 score, that's a temporary thing. The good thing about this recession that we're in, we are in a recession. If there's any doubt in anyone's mind, we're in a recession. 20 million people file for unemployment. That should remove all doubt in anyone's mind that we're definitely in a recession.
So how long do you think this recession may last this time, Dave?
Well, it's hard to say. I think, and this is just my personal opinion, and I'm not alone here. A lot of the other experts, Barry Habib with mortgage-backed security highway, a lot of the other people are saying the same thing I'm saying. Is if we keep doing what we're doing, we're already starting to see numbers starting to flatten out. We're not on the downside where the number of cases reported every day are going down, but they've kind of flattened out. They're not rising anymore. And I think so what we're doing, self-isolating, what we're doing right now, everyone here is working. And if we keep doing that, I think that probably within a month or two, we'll be on the downside of this, and then things will start going back to normal. And when people go back to work, that's what's really going to drive the mortgage business. Is once we see that a lot of these people have gone back to work and the unemployment rate has gone down to where it was before, 3.5 or less, then all these measures that we're taking right now with the rates, this is going to kind of go away because we're going to get back to normal. So I don't think it'll take very long if this lockdown works. This works and the coronavirus is under control in a couple of months. Maybe a couple of months after that, maybe by the end of the summer, the lending business should be starting to get back to normal. But it all keys on these people going back to work, because until they do, the investors aren't going to be willing to put their money into mortgage-backed security. No one's buying these loans. We can't keep making them.
Okay.
The other thing that's happened in our business, and another result of the pullback by investors, is that we've raised our minimum credit score from 580 to 620. Now, I've talked to a lot of people out there, and there are some lenders who've gone to we're at a 620 score right now. Some lenders are only doing FHA loans for people 680 and above. And we may have to go to 640 if it gets worse. We're trying very hard to stay at 620 because we want to give as many people a chance to buy a home as possible. But if you are at the 620 range, 640, 650, 630, then there is going to be a little issue with the rate. You're still going to get a good rate, but it's going to cost, and someone's got to pay that, and that's why you've got to get those seller-paid closing costs. That's probably the most important thing for anyone with less than 660 score right now, is that someone's got to pay those closing costs, and you need seller participation.
Mm-hmm. Okay. We have a question from Jacqueline that just came in. I have qualified for a FHA loan right now, but would it be better for me to work on getting a higher score to qualify for a conventional loan?
It depends on what your score is. Now, whether you take a conventional loan or an FHA loan, normally is the factor that affects that is how long you intend to stay in the home. You intend to stay in the home longer than 5, 6, 7 years, then a conventional loan is definitely the way to go. But if you think you may be moving in the first 5, 7 years, then an FHA loan is going to be better off. You're going to be better off with that. You're going to spend less money over that 5 years. A conventional loan is going to really kick in once you've got enough equity to where you've got 20% equity on the home, and you could drop that mortgage insurance. Then every year after that, you're saving money. Down the road, you look at it, you save a ton of money over an FHA loan. 20 years in, 15 years, 25 years in, you save a ton of money. But people move around a lot these years. The average person, I think, moves probably every 7 years or so. So in a lot of cases, it does make more sense to go with an FHA loan. As to whether you need to go your score up or not, it depends on where it's at now. Now, if your score is under 660, it would definitely be in your best interest to try and get over 660. But again, you can still do a loan with Homestar down to 620, and with seller participation, it really won't cost you anything. But so it's kind of hard to answer your question without knowing your specifics. And Jacqueline, I'll be reaching out to you after the meeting at some point this afternoon or tomorrow. We'll talk about your specific situation, and maybe I can give you a little bit specific guidelines or guidance, because every loan and every person is different.
Mm-hmm. Yeah. Yeah. One thing what I'm recommending to my clients, like for particularly looking for condo type properties, some complexes are not FHA approved. So if you have ability to qualify for both type of loans, if you will be like for or even like some single family homes, like maybe condition of the property is the FHA guidelines, and if seller is not willing to bring the property condition to the FHA guidelines, the better alternative will be conventional. So if you can qualify for both an FHA and conventional type, you have capacity to choose what will be the better option for you. I think this is the ideal world scenario. Don't you agree, Dave?
Yeah, and if you decide to go conventional, there is a program out there that's very similar to FHA. They have a lot of flexibilities that FHA has. It's called the Home Ready program. It's a conventional loan with 3% down, and you save on your mortgage insurance, and it's a little easier. They're more flexible on income sources and things like that. So not quite as hard as it used to be now that the Home Ready program is around, but it is a little bit more difficult to qualify for a conventional loan. The guidelines are a little bit more stringent.
Okay. Cool. Sounds good. Anything else, Dave, you would like to talk about and share before I will continue the presentation on the roadmap of what is involved in the like real estate, educating the buyers?
No, I mean, I think that the best advice if you're thinking about buying a home it starts with you. You need to run your budget, decide what you can afford to put into the deal cash-wise, decide what you can pay per month. Then you need to work with someone like myself to decide, what's the best program, what's the best, area, or, what price point you want to be at, and save yourself a lot of time there. And if there's a problem with your credit, the sooner you find that out and start addressing it, the sooner you'll be able to get into it. But right now, while we're kind of under lockdown, it would be a great time for people who have maybe lower scores to get those up and be ready. Because one thing that happens every time you have a recession, and we're definitely in a recession, is that home prices tend to tick down. It's historically a proven fact that every time you have a recession, home prices get a little bit cheaper. So this may be a good opportunity for you to go ahead and snatch that house up you've been looking for and get it for a good price. And it all starts with that pre-approval and that credit score. So,
Yeah.
And if you have problems with your credit, if you're worried about that, you're not really sure where you're at, just contact me after the meeting sometime, and I'll discuss that with you and give you all this you need to get where you need to go. I always say I've never met anyone who can't buy a house. The question is, what do I have to do to qualify for that home? How long is it going to take? And therefore, when can I buy a house? Not if I can buy.
Yeah, I totally agree. For people who can qualify right now, if they are in going through downtime, like times right now, like going into recession, we see less people can qualify, and we are buyer's market, and just taking advantage of it because they like there are that are for sale and they're in condition, so we can help them negotiate very good prices and very good terms for the loan. Yeah, I agree. So do you think that we should expect the interest rates to come down soon, like what's going on with the interest rate right now?
I think that they're going to come down any more than they are right now until this is well over with. And it's questionable whether
It's very like, do you have this maybe your speakers are disabled? I hear some echo. I don't know if it is my computer or
I'm going to try this. Any better?
Kind of. I still have a little bit of background noise. I don't understand. Like when you speak, like I don't know why. Maybe it is just me who is hearing.
Jane, can you hear us well?
Yeah, Jane, how can you hear me and how can you hear Dave?
Guys, I can hear an echo and the background noise as well when both of you speaking.
When both of us speaking.
Mm-hmm.
Okay. That's strange. Dave, the headphone that you have right now, is it turned on or turned off? If you
No, I tried to hook it up to my computer this morning, and Bluetooth just wouldn't connect for some reason, so it's not working.
Not working. Okay, maybe just then be closer to computer.
I was hearing a little bit of echo with you before, but I can't hear that now.
I'm sorry, you cannot hear me well. Is that what you said?
There was a little bit of echo with you before, but I don't hear that now.
Okay. Okay, but like I don't know how to fix it at this time. It is, I guess we would need to go with and I apologize, guys, for background noise if you not hear as well. Once you are, and I highly recommend to my client. Can you see my computer screen? No, I haven't shared it. So let me share my computer screen with you guys so you can go and see my background, the roadmap. Before we start actively looking for a home, it is really important for us to know what amount and what type of financing you can qualify for. Because what is happening sometimes, some buyers start doing it vice versa. They start actively looking for a home, and once they find the home, they're applying for financing, and sometimes it takes longer, or sometimes they find out that there is a cloud, something is happening with their credit and it needs to be fixed, and they just cannot get the pre-qualification or pre-approval letter in a timely manner, and they may lose on good opportunity. They may get excited, fell in love with some property, and if they don't have the pre-approval letter, and we can write an offer, but seller most likely will not take our offer seriously until they see the copy of the pre-approval letter from their lender, and knowing the fact that buyer can qualify for a loan. So it is extremely important to take care of it ahead of time and get it ready. And especially if we are dealing with multiple offer situation, we've seen it quite often just before going into recession. Right now it is a little bit like we see less competition, but there are still properties that are going on the market like really low priced, and there are buyers out there who are targeting this type of properties, and we still receive multiple offers. So in order to be competitive, have the pre-approval letter ready. There is a difference between pre-approval and pre-qualification letter, and let me explain to you the difference. The pre-qualification letter is pretty much the letter that lender can issue to you when they receive the loan application, but nothing has been verified. Like what I mean by that, buyers did not submit W-2s, like maybe tax returns and any other supporting documents verifying the income, the employment, and all these things that the lender is verifying. But if you did submit all these documents to your lender, then they can review it, and if everything looks good according to their guidelines and standards, they can issue you a pre-approval letter. And it is much stronger because if you send an offer with the pre-qualification letter, if there is an experienced seller, an experienced listing agent on another side who can advise to their client, some sellers I've seen in my experience, they would not even consider looking at the offer that they received that states pre-qualification letter, because it may be a red flag for them, because they understand the difference. So make sure that when you start your pre-approval process and your communication with the mortgage consultant, submit all the paperwork ahead of time in a timely manner, so that they can review everything, and maybe even send your paperwork to the underwriter so it is reviewed and you have a strong pre-approval, that later on you will be not unpleasantly surprised and you will get denial. I've seen some scenarios when some buyers are going with some online mortgage companies that did take application and issued they even call pre-approval letter, but really it was nothing was verified, and they did not pay close attention to the file. And later along the road, when we found the property, we've secured the contract, we already went through appraisal, through inspection, the loan has been denied for some reason. That's why I highly recommend to all my buyers to, when you're choosing the mortgage company, make sure that you are working with reputable mortgage broker or the bank, and you are working with the loan officer who really has quite a lot of experience and know what they are doing. I don't want to give any names of the banks and mortgage companies that I've been working with before, who did not do their homework ahead of time, and some of buyers' loans have been denied. So I am encouraging to work with a reputable mortgage company. Like Dave, don't you agree? I'm sure you've seen quite a lot.
Yeah, believe it or not, when you submit your offer, 90% of the time, the listing agent that you made the offer to is going to call me. They're going to ask me about that pre-approval. And if I don't answer all their questions right, you probably are not going to get binding on that contract. I'm not going to accept your offer. I had one call me yesterday, and she asked me, the first thing she asked me, what was credit score, or was it above this amount? And she asked me if I reviewed pay stubs, tax documents, assets, all those things that we're supposed to pre-approve, to do to pre-approve someone. And had I said no, that person would not have gotten their home. I was able to say yes, though, because I do that stuff. And this morning I got the contract in, they did get their home. So yeah, it's very important. And not only to the selling agent, Julia, but to the listing agent, they've got 4 offers in front of them, and if you tell me if 3 of them, I verified income, you're the one that didn't verify income, you're not getting that. They're not going to consider you.
Yeah, I agree. Extremely important. Okay, so let's go to. Is there anything else, Dave, that you would like to share with us about, like, some tips that you can share with our buyers before I move on into agency?
Well, no, like I said before, it's kind of just starts with you. You need to know your budget. You need to know what you can afford. And then, once you tell me that, then I can tell you what price point to look for, so you're not wasting your time looking for homes that don't meet your needs, or that, are overpriced for you, for your situation. The last thing I want to do is put you into a loan that you can't pay back, and you end up in foreclosure. That does no one any good.
Yeah, I agree. And I think, like, we had a question, we have a question from one of the participants. Is mortgage
about the mortgage insurance? Yeah, mortgage insurance is not required if you put 20% down. Now, FHA is going to require mortgage insurance, period. Even if you put 80% down or 20% down, there is going to be some mortgage insurance. It's just not going to be very much. The thing I don't like about FHA mortgage insurance is it lasts for life. So a lot of people that have to get an FHA loan to get into their home will eventually, in a couple of years, refi into a conventional loan where they can cancel that mortgage insurance down the road. And anything over 20% or anything under 20% down, you're going to have mortgage insurance.
Mm-hmm. Yeah. Okay. And I think the program, like another question that someone is asking, what was the name of the program that was similar to FHA? I think you did mention it was like Home Ready.
Yeah, there's actually two. Fannie Mae's got their version. It's called Home Ready.
Mm-hmm.
And then Freddie Mac has their version. It's called Home Possible.
I'm sorry, what is the second one?
Oh, Home Possible. They're
Home.
very similar, but there are slight differences. And then, depending on the nature of your loan and your particular circumstance, I may suggest, to go to Home Possible on one person and go to Home Ready on another. So one may work better than the other, but they're basically the same.
Mm-hmm. Okay, thank you. Okay, guys, so moving forward, let me explain to you the difference. We have like two types of agencies. Yeah, once you identify or about to make your choice of what agent you will be working with, you need to understand the difference between type of agencies. There is seller's agent, who is also called listing agent, yeah, and like buyer agent. Actually, when you look at the purchase and sale agreement, when you will get to that point, there is like listing broker and selling broker. Listing broker represents the seller, and selling broker is representing the buyer. But pretty much like in simple words, when people start looking, there is like a seller's agent who has the fiduciary responsibilities for the seller. And when buyer hires the agent who is representing them, usually buyer's agent has fiduciary responsibilities to the buyer. And of course, there is a difference. And let me explain to you the difference. So if you look at this map, you can see that this slide, everyone can see my slide. Dave, can you see the slide? Yeah, okay. So seller, these 5 items, pretty much like buyer's agent can do, yeah, arrange the showing, and the listing agent and buyer's agent can do these things, no difference, yeah. Arrange the property showings, assist with financing, provide property data, and explain the forms if buyer is unrepresented and they would like to make an offer, and also monitor the closing to bring it to closing table, yeah. But if we look at this slide, we can see that if buyer hires the agent who is going to represent their best interests, these items, these are things that they can get, and their agent will be providing them with. First of all, protect buyer's interests all the time, yeah. Explain all the disclosures and present all the disclosures, and whatever is to agent's knowledge, agent has to share with their buyers, and sometimes even to the point that it may stop the buyer from purchasing the property. It is our job to give all the disclosures, share all the information that is available to us, that our buyer can make the educated decision on like moving forward with purchasing the property, or probably it would be better to find something else. Many things can, like maybe there is like a structural problem, or something happened with that property in the past that you probably even don't want to deal with it in the future. Maybe it was like even some simple things, like maybe it was like a previous homeowner passed away in the property, and some people just wouldn't want to, they have superstition that they would not buy it, and if it was not disclosed to the buyer properly and they found out, then buyer may not feel comfortable in living in the property knowing that fact. So all these little matters, details matter. when buyer is making the decision. Yeah, buyer's agent can prepare the comparative market analysis that is called like abbreviation CMA report for the buyer, where you can see all the data, what is available for sale in the neighborhood, what is currently under contract, and we usually try to analyze last 6 months sales. If the property more located in a rural area, or if it was not enough sales in this particular neighborhood, we extend the search and do the search for 1 mile, maybe 2 miles. And if it was not enough sales in the last 6 months, that most appraisers are trying to find the recent sales in the last 6 months, sometimes we need to extend the search to maybe 1 year or longer. It really depends on where the property is located and how many sales, recent sales. We need to find at least like 3 good sales that are the most competitive to the subject property. Okay, and of course, we are making sure that we are representing the buyer only, and we owe fiduciary responsibility. We do not share all the information that the buyer shares with us is staying strictly confidential, and we are not sharing it with anyone else unless we have buyer's permission to do so. Okay, and once we've identified the property that our client is interested in, and we've discussed everything with the buyer, we structure the best offer that would go through, and also at the same time protecting buyer's interest. Yeah, and we give access to our clients with MLS listings. But in addition, since we have this program that has access to some off-market properties, to some foreclosures and bank foreclosures, auction for sale by owners, we give access to our clients with this data for these properties and listings as well. We negotiate all the inspection items that are coming up during the due diligence period, all the repairs that seller would have to do, and occupancy days, because sometimes buyers would like to move in either before the closing or sometimes after, if seller requires maybe a couple days or couple weeks after the closing date to have possession of the property. Any buyer credits and all the costs that are possible that is associated with the seller in favor of our buyers. And as I mentioned, like, we owe fiduciary responsibilities and directly to our buyers. And if our buyers choose to work with us, we also make sure that we negotiate the home warranty for our buyer, and they are getting it at the time of closing. So they have 12 or 13 months of protection after the closing date. What it means, like, if something breaks after the closing, like there is HVAC is broken, or pipes are broken, electricity, appliances, they are covered, and they have the peace of mind that they wouldn't have to come up with big chunk of money to fix these things. It may be like some service fee associated, but for each warranty company, the fees are different. But we are making sure that we are negotiating the home warranty for our clients, and it is included. They are getting it at the time of closing. As I mentioned before, we're providing the cancellation guarantee to our clients and satisfaction guarantee program. Okay. So this is a new slide that we just came up with, and new program that we just implemented on our team, and I'm very excited about it, and I really wanted to share it with you guys. It is a virtual home buying process, and I see that our clients really like it because what this program allows them to do, to view properties while they are staying at home. And there are different ways how this program works. Sometimes some virtual tours are already available for our clients to see the properties. So if it is available, we are making sure that we are providing it to our clients. Or sometimes we physically go to the property and we are organizing the live tour for our clients, and we are going through each room, through every corner of the property, and show them the live tour, so as they were with us seeing the property. And we see more and more often when buyers are ready to make an offer without like literally physically being at the property. We are using very good cameras, and after this virtual tour, it is giving them very good idea like how the home looks like. It works very well also for our relocating buyers, because we have quite a lot of them right now who cannot come to Georgia at this time. We are going to the properties for our clients, and we are their eyes and ears. And after we secure them, after we choose the property, or our buyers choose the property that they like, we put the offer, negotiate all the terms, and they can sign the offer paperwork electronically. It's very easy. We create the e-sign and send it to them. They can review, and just with a couple clicks of the button, boom, the offer is already signed, and we can present it to our to the listing agent and start negotiating that way. Once we secure the contract and we are going binding under contract, the earnest money can be wired, so the buyer doesn't have to physically bring the check anywhere. The closing attorney is sending the wiring instructions, as Barry has mentioned, like before wiring any amount, you definitely want to call to their number, verify, make sure that the instructions that they sent you and the bank account that they sent you are correct, and you are sending it to the right account. So just be mindful of it. If once you receive the wiring instructions from closing attorney, call them to verify everything before sending any funds. Okay. Inspections. Our inspectors are still working, and they are going to the property physically, and they are doing pretty much the same things. All the findings, they are of course making the pictures as they used to, and they put on the inspection report, but they are also doing some additional videos, and they are doing the live videos as well, going through the property and showing and educating our clients on any defects that were found during the inspection. So if you don't feel comfortable going to the property and meeting with anyone in person, everything can be done remotely right now. And by the way, like another thing that I forgot to mention, if you still want to come to the property yourself and see it in person, or what we've done, like we're of course like having all the gloves, the masks, fully protected. We open the door, we're keeping the same distance, and we are letting our clients maybe get in the property and have the tour, keeping a very safe distance from our clients. Okay, or we can secure the property and then our client already arranged the tour that way. So there are different ways. Once we start working with the client, we kind of discuss what will be the best option, what they are comfortable with. Because in Georgia, real estate is considered like essential business. So we still continue working and going to the properties with client or without, we're allowed to do so. Some states in the United States, like are not allowing anyone to do any business, but in Georgia, real estate is considered essential business. Okay, so once we go to the already go through appraisal, through financing, all the inspections. The closing nowadays can be done also completed remotely and virtually. This is something new that we've started implementing just recently, probably in the last 2 weeks. So you literally can purchase the home, staying at home all the time. We are able to do it. And I think, like Dave, most of your clients like even don't need to meet with you in person. You can do everything remotely nowadays as well, correct?
Oh, yeah, it's very rare that I meet with a customer.
Mm-hmm.
It's all done by phone, email, fax.
Mm-hmm.
It's a lot easier for people that way.
So all the forms can be signed electronically on your end as
Yeah,
well.
loan disclosures can be signed electronically, and when you send your documents to us, you have the choice of either sending them to a secure email channel or you can log into our borrower portal and upload them there. And that's a little bit safer. So,
Mm-hmm.
and it's been that way for a long time. I've been basically paperless for years, and
Mm-hmm.
most of my business is done by phone and by fax and email.
Mm-hmm. Mm-hmm. Yeah. That's good. But sometimes, once in a while, we come across clients who are not computer savvy and they're more like old school. And this is when sometimes we have to go and like meet with the person, with buyers in person. Right now with social distancing, maybe like clients are leaving us the paperwork where we can just pick it up and deliver it to the party, but very rarely. A majority of people do realize the importance of going virtual nowadays as well. And who people who were resistant about it before, I see like they're coming out of their shell and learning these things and starting implementing. They understand that this is the world. Well, they need to adjust to what is happening in the world nowadays, especially if they're serious to purchase the property, because buying the property is one of the biggest investments that majority of us are doing, and we're taking it very seriously. Yeah. I wanted to share with you these slides that shows the benefits of home ownership. Yeah, of course, once you become the homeowner versus just paying rent to landlord, you can build your own equity. So if it is your short-term investment or long-term investment, if you make the right choice buying the property for the right price, most likely you will start building the equity in your property. Of course, the real estate market goes up and down, and sometimes if you purchase the property already, yeah, and the property value goes down, don't worry that much. It most likely, if you hold this property and if you are able to afford the mortgage payments, the property value eventually will go up. Like what we've seen in 2008, 2009, a lot of properties like lost value, and buyers who kept the property, they did not get it, put it into foreclosure. Few years after, boom, we have equity. So in the times like this, in case if your property lost value for any reason, don't worry, just try to work with your bank, maybe sometimes doing refinancing or lowering your interest rates, and the majority of the banks would work with you nowadays, helping you out. Just try to continue making the mortgage payments, of course, because Georgia is a non-judicial state. If you are not making the payments for month two, the bank can foreclose you without even bringing you to the court. With COVID-19, I see like the situation is different, and they are not going to evict you or put you into the foreclosure. Like at this time, what we're going through, because we have never really seen something like this before. So the situation, what we're going through right now, is definitely different. But once we go through it, and people will start going back to work, and things will slowly start going back to normal. Probably we will not come back completely to what we've seen. We will. The world is changing, and the industry is changing quite a lot. But no, like you would still be responsible for making your mortgage payments. Yeah. And so what like also like one of another benefits is the tax savings. Yeah, like when you and maybe like Dave, would you like to talk a little bit about the tax savings benefits for the homeowners?
Well, it's gotten a little bit worse with new tax laws, but basically you can write off a lot of the mortgage or the interest you pay on your house throughout the year on your taxes, and that's deducted from your overall earnings before taxing, so it'll save you money on taxes. We're hoping that it'll go back kind of to the way it was before, but when the new tax laws were made in 2017, 18, they did take away a little bit of that benefit. Mainly affects people with more expensive homes, though. So people with $100,000, $200,000 homes, they're probably still getting about the same advantage that they did before.
Okay. Yeah, and one of the other benefits, like versus like when you are renting the home from someone, from the landlord, yeah, you have the pride of ownership, and you can customize your home. Like if you are in the subdivision, there are certain rules and restrictions. You may need the permission from your HOA to maybe grow certain trees, or paint your home in certain color, or maybe put the fence on certain heights, and certain even type of material. Some HOAs can be really strict, but inside of the home, you definitely can customize your colors and play with it. Like if you live like in condo, of course you cannot move like really like certain walls, and there are more restrictions, but still you can do a lot of customization to your home without asking permission from the landlord. You are your homeowner, and you can make your own decision, and a lot of buyers love this fact. And of course, there are some responsibilities that are associated with it. Yeah, so you need to maintain your mortgage payments and all the other payments, and the maintenance of the property. Probably maintenance of the property is one thing that is different. Like when you're a landlord, something breaks, you make a phone call, and boom, it is done. But here you need to take care of these things yourself, because it is your property. Yeah. So, and the next slide is pre-approval. We already went over it. Once we have the consultation with our clients, we're asking a lot of questions. We have the questionnaire of almost like 100 questions that we are asking. So sometimes we are very specific, because the more clear you are on things that are important for you to have and maybe good to have, but you can live without it. If you have like number 1, 2, 3, 4, 5, but the rest is kind of secondary, or certain items are very important for the client. Sometimes buyers are very specific about what they're looking for. So we're trying to get as many questions answered. So we're sending you only the right properties that are meeting your home search criteria. Yeah, and you are not just getting everything. We start sending you the listings once you find it. We are showing it to you, arranging the showings, and negotiating the terms of the loan. And this is a list of the properties that you will have access to once you start working with us. Yeah, of course, FMLS and Georgia MLS, this is the search that majority of agents in the state of Georgia, actually FMLS and Georgia MLS are two main search systems that all the realtors in Atlanta metropolitan area are using. Some realtors are just members of one MLS versus another, but majority of us are members of both systems. So with my team and EXP, we are members of both systems, so we are plugging our clients to receiving searches from both MLS and Georgia MLS, and in addition, we give them access to some off-market properties, as I said, to bank foreclosures, HUD homes, corporate-owned, government-owned properties, pre-foreclosures, probate and estate sales, court-ordered sales coming soon, to some expired listings. We are working with a lot of wholesalers and investors. So investors, like I have about 500 investors in my database, and at least like 100 wholesalers who are consistently sending me different types of off-market properties. So once I know what my client is looking for, once I receive the property from this type of entity, we match, and we are sending our clients the best properties to review. Yeah. These are the search tools that we are using, as I have mentioned. The MLS, we're also connected with a lot of agents, and agents are consistently notifying us about their coming soon properties that are not available to general consumer sometimes, so we are updating them. Like sometimes we go through for sale by owners, yeah, or even social media. A lot of sellers nowadays are publishing their properties into social media, so we're doing that search for our clients as well. So once we secure the contract and we go under contract, the due diligence period starts for the buyer, and I wanted to talk with you about types of inspections that are available. So we usually start with regular home inspection, and the home inspector is actually, like Stan, supposed to get on the call with us, but I don't think. Let me see if he has responded. No, I have not received this response, so no. Okay, I will just tell you about the types of inspection that is available and what follows. So once the home inspector completes the inspection, if there is any sign of termites or maybe structural damage or any other, or maybe mold, he will mention to you. Majority of home inspectors do not special and do not include everything in that report. So we usually order a separate inspection if needed for termite, for structure, or maybe for the mold inspection, for radon. In Georgia, actually, there are certain areas and cities that have quite high accumulation of radon. So there is a special radon test. And actually the home inspector can do, majority of home inspectors do have this option available. It is available for a separate price. They install a special device in the property, and usually it needs to run for about 48 hours, and then results show if the accumulation of radon is enough, like to a certain level, or it exceeds that. And if it exceeds that, there are also certain things that can be done to eliminate, evaporate this gas from the property. There are certain pipes that can be installed if it is the property that is built on the basement. If it is on a slab, they just bring these pipes going like going to the roof and going up in the air. But there is actually a if you Google radon map, you can find this map. It is available, and you can see what areas in Atlanta metropolitan area have more accumulation of radon versus others. Yeah. And also, if the property is built before 1978, they used to use like lead-based paint. So there is a special test that can be done for lead-based or asbestos. I recommend to my clients to look into it, because if this property does have presence of this kind of materials, it may affect your health condition later on. So it is better to invest upfront and know what you have and be ready in case if you want to cancel the contract, or maybe we can negotiate during due diligence period. So any findings that inspector has pointed out during the home inspection, there are certain ways to approach it. The first one, like if it is a regular sale, and if a seller is open to do certain repairs, of course, we'll address these repairs to be completed before the closing for our buyers. But in certain scenarios, like if it is bank owned or short sale, or if a certain seller doesn't have any funds and the property is being advertised sold as is condition, we know, like even going in under contract, that seller is not going to do anything. It is for our buyers' information purposes only. So we get the estimates how much these repairs will cost, and then we maybe negotiate the price down with our findings. Because during inspection period, the earnest money is protected. And if we don't come to agreement, or if buyer for any reason wants to terminate the agreement, we can always terminate and buyer will get the refund of the earnest money. Just keep that in mind, okay? And once we negotiate the repairs for you, the next step would be for you to authorize your loan officer to go ahead and order the appraisal. I recommend to my clients to complete the home inspection first. Make sure that we have negotiated and this is the property that you still want to buy and feel comfortable buying. And then we already go to the next step, which is ordering the appraisal. Because keep in mind that buyer is responsible for paying, in most of the cases, buyer is paying for inspection and for appraisal. And in case if something found and you want to terminate, like no one is going to refund you the money for the inspection. Or if you go to appraisal is also paid by the buyer. So just remember these little details. On average, like one of the common questions that buyers are asking me, how much does it cost, the inspection and appraisal? It depends on the size of the property. I've seen like on average it is about $300, $350. If home is bigger or smaller, it can be less. And it also varies what kind of whom you're using, what kind of credentials, certifications, license. If you're hiring the licensed and certified inspector, because believe or not, in the state of Georgia, anyone can call themselves inspector and do the inspection for you. It is really not required for the inspector to be licensed and certified. Quite a lot of them do have these certifications, and I highly recommend for you to find the reliable inspector who have proper credentials, because if they missed something during the inspection and later on you find out the latent defect with the property, you can go back to inspector if they are licensed and certified, because their insurance is covering it. But if you are using, like, I don't know, some friend who maybe have some type of experience, or you found someone online who don't have these certifications, and later on, God forbid, something comes up with the property, it may be too late already to back out, or you may lose the earnest money later on if we already missed the due diligence period. So just be careful with your decision, whom you are using, who will be doing this type of things. The appraisal is ordered by the mortgage company. You can use your own appraisal, but if you're applying for financing, the mortgage company has to order place the order for the appraisal, and it is usually very regulated, and we don't have any control of choosing any particular one. Dave, am I correct about that?
Right. We have to work through an appraisal management company, and they assign the appraiser. So I never know who the appraiser is going to be. The cost for those is between $450 and $550, depending on the property. And I wanted to say one thing about the inspections real quick. I like it when my customers send me a copy of the inspection report. What I'm looking for is anything that I know is going to show up on the appraisal. If certain things go on the appraisal, they have to be done prior to closing, which means we have to send a contractor out there to fix it. Then we have to send the appraiser back out, and he charges you another $150 to inspect the property to make sure those are done. If we catch those before the appraisal order and address those then, that can avoid the time delay and the extra costs with that final inspection if the appraiser finds that the repairs are not done himself. Do those repairs for you.
Okay, thank you. So once the appraisal is ordered, and my recommendation, do not delay with, once we go through inspection and going into appraisal stage, make sure that you are doing everything in a timely manner, because in the contract you are protected by due diligence, like inspection period, by appraisal, and by the financing contingency period. This time is really of the essence. All your contingencies start from the binding date, and your earnest money is protected by all the contingencies. But if the appraisal, for instance, has not been ordered in a timely manner, and especially right now when we are going through this lockdown, we are experiencing some delays when we are relying on third-party companies, because they are short in stuff. So better be and even like when we were going through normal times, their appraisal period takes from 7 to 10 days. So what do you see nowadays, Dave? Like, how is the appraisal works? And I've seen that some, like Fannie Mae and Freddie Mac, I think they even allow some appraisers to do the appraisal kind of like coming to the property and see it from outside only and reviewing the pictures. Is it correct?
Yeah, pretty much all the agencies have fallen in line with this. It only comes into play if the appraiser is unwilling to go into the property because he's afraid of the virus, or if the seller will not let him in because they're afraid he'll bring the virus into them. Now, if we run into those cases, we can do what's called a drive-by appraisal, where he just inspects the exterior of the property, pulls up all the data online, and does a drive-by appraisal, and we're accepting those now. The fact is, though, Homestar has not had to do one of those yet. So far, all of our sellers have been willing to let the appraiser in, and all our appraisers have been willing to go in. We've had a couple where we had to switch appraisers and find one that was ready to go in, but that's not been a problem yet. I did want to say one thing real quick, though. When you were talking about not wasting time, that just brought up something that I like to tell everyone. People ask me how long it takes to close a loan, and I tell them it depends on the borrower. It depends on you. If you take 5 days to send me a pay stub, well, you're probably not going to close on time. If you put off that appraisal for 3 weeks, you're probably not going to close on time. If you handle everything in a timely fashion, like she was saying, that inspection, you need to order that right now. As soon as you get under contract, that's the first thing you need to do, and you get that out of the way. But everything is time sensitive, so you control how quickly your loan closes. If you cooperate and send things in a timely fashion and send exactly what we need in the form that we need it in, your loan's going to go very quickly. If you don't, you may be looking at the loan dragging out and having to request an extension from the seller, which they may not grant. They may grant it or they may not.
Okay, got it. Yeah, thank you for clarification. And by the way, like how long is the fine, like how, what is the time frame for closing the transactions nowadays? Is it like 30 to 45 days, or the process is longer now?
No, I've not found that anything lately has really cost a lot of time. The only time I've been delayed recently is where the person, like I said before, had like a 620, 625 score, something like that, and the
Mm-hmm.
seller was not paying enough closing costs to make the deal work.
Mm-hmm.
Only charged the buyer 2 points, and it takes 3, 4 points to get that rate, and the seller's not willing to participate, and we can't close the loan. And so I've been having to negotiate with sellers myself lately. I actually called the seller and explained to them that, look, you got this house sold, but you got to participate. You got to give up a little money to make this work. And
Mm-hmm.
most of the time, I think I've done that 3 times here in the last 2 weeks. And every time we've been able to negotiate something that would work.
Okay, got it. Okay. Yeah. So once we go through appraisal and in ideal world scenario, we want to get the clear to close during the financing contingency period, and it is very durable and possible. If you have done your homework ahead of time and submitted all the required documents to your loan officer or to the processor who is working with you on processing the file, the transaction should be pretty much clear. And my recommendation, try to be as honest and transparent, because if like we've seen some cases when the client did not disclose the information to begin with, and if underwriter is going to find out this later in the process, they may request to provide some additional information, or they may even, there are some cases when they can reject the loan even after you've issued the original pre-approval to begin with, correct?
Yeah, and what I tell people is that they need to treat me like this is a court case, not their lawyer. We've all seen it on TV. You tell your lawyer everything. OJ, did you do it? Things like that. And you tell me everything. I decide what the underwriter needs to see, what they don't need to see.
Mm-hmm.
But I need to know these things so I can kind of get around them and be prepared and help them work through those.
Mm-hmm.
If I know about it, it hits me by surprise, and it could be a problem.
Yeah. I agree with you. It is better to disclose everything to begin with, because the underwriters with majority of mortgage companies are very detailed, and in my experience, most of the time they do find out things that
you can't hide anything these days.
forgot about. You, like a lot of buyers forgot, but they do find these things, and they are asking for verification.
And one other thing I wanted to add in real quick while we're talking about this, one of the things that we're doing in response to this virus and all the layoffs is that we are going to re-verify employment right before closing. And you have to be working. You get laid off, you need to tell me immediately. Because, we are going to find out before you close, and the sooner we find out, the better off we're all going to be.
Yeah. Actually, very good point that you brought up. Thank you, Dave. And another thing that I want to share, especially like if you're applying for a loan and you are on the edge with the credit score, try to be very diligent and responsible with making all your payments on time. And try to not purchase anything extra that may affect your debt to ratio, and especially buying something like using your credit score or credit card that may affect and bringing your your credit score down, because the mortgage company most of the time brings your loan application and pulls your credit score in the beginning, and just before the closing they will pull your credit again. And if it came down, like Dave, you may want to talk about it, what might happen then.
Well, your best practice when you get pre-approved is try and keep your life an exact snapshot of what it is that moment.
Yeah.
Your credit card balances are $500. Your income is $3,000 a month. You want that to be the same all the way through. If we have to pull a new credit report, I just had this happen recently twice, where the credit report expired, a whole new credit report, and the person missed a $25 Wells Fargo payment, and that brought their score down 50 points. Now we don't have a deal until we get that score back up.
Mm-hmm.
So you need to avoid buying anything, avoid using those credit cards, avoid any big deposits into your account or out of your account, your bank account. Just try not to do much of anything financially until this loan is closed. Then you're free to do whatever you want. I had a guy one time went out and bought a Harley Davidson a week before closing, and we had to pull a new credit report. Now there's a new $40,000 debt with an $800 payment on it, and he killed his debt-to-income ratio. He didn't get his house.
Yeah.
Another guy quit his job the day before closing. Later, he quit in the morning. We called that afternoon, and they said he doesn't work there anymore. Closing was canceled. It was done.
Yeah.
So, yeah, you've got to be working, and you've got to maintain that credit score for this to work.
Mm-hmm. Yeah, a very good point. Yeah, thank you for sharing that. Yeah, and so on a happy note, once you get your clear to close and the mortgage company did verify that they are sending the paperwork to the closing attorney, the closing package, we are scheduling the closing date, closing time, and if it is happening right now, it is virtual closing. Once we go out of lockdown, it will be back most likely in person. But if you are traveling somewhere, you're out of state, don't worry. We still can do remote closing. Like you can give the power of attorney to someone or even on my name, and I will be glad to take care of the closing for you. Or maybe they will continue implementing the virtual closing even after we get out of lockdown. Or the closing attorney can send you the package. You can sign everything ahead of time and mail all the originals to them. They just need to receive it prior to the closing and funding the file. So the happy moment is the closing date and when you are becoming a happy homeowner. So this is we're here to guide you and help you, be your advocates, be your eyes and ears through the entire transaction, protecting your best interests, and even after the closing, our clients always reaching out, we are staying in touch with them. If any issues arise, even after, or even simple things like utility connection, or something like that, we are here to help you guys. So let's see, let me open the chat real quick and see if we have any more questions that came up. So let me review the chat. How much do home inspection and appraisal typically cost? Oh, we've answered the question. Yeah, so I said it is about $350 plus minus, and if it is, if the home is a little bit larger, then I've seen it even coming up to 500, 700, and also on qualifications of the inspector. So it's the appraisal 450 to 550 on average. Any other questions that guys you want?
It looks like Ms. Brown had a question about the closing costs, and she's asking if they're a percentage of the loan amount. And the answer to that question is yes and no. There are certain items that are a percentage of the closing cost of the purchase price, such as the discount points, interest days, things like that. Transfer taxes, intangible taxes, they're all percentages of the loan. There are other costs that are a fixed fee, like the attorney's fees, the title insurance fee, or not the title insurance, the search fee, appraisal fee, underwriting fees, all those things are fixed prices. So on a smaller loan, like a $100,000 loan, your closing cost may be 4%, 5%, 6%. But on a $200,000 loan, because those fixed prices are fixed, it ends up being a less. I'd say on average, most of the time, closing costs are somewhere between 3 and 5%. That's kind of a broad range, but they usually fall somewhere in there. And what I'm seeing in the market lately is that most sellers are not willing to pay a lot of closing costs. They're paying about 3% or a little bit less, 2%.
Mm-hmm.
Closing costs are 5%. They're only paying 3%. That leaves you paying 2%. There are ways to finance those. We give a lender credit sometimes. You can also take a higher rate and get yield spread premium. They'll pay for your closing costs. Have you ever heard of a no closing cost loan? That's how the closing costs are paid on those. You take a higher rate. They don't tell you that. You're getting a higher rate. They're using that yield spread to pay your closing.
Mm-hmm.
There are creative ways to get around your closing costs and their down payments. But yeah, the question is, it's not as easy to answer as I'd hope. But some items are a percentage of the purchase price and some are not.
Okay, and a question like the maximum amount that seller can contribute, it depends on the program.
Depends on the program.
Dave, would you like to comment on that?
FHA and VA, and USDA will let the seller pay up to 6%.
6%. Okay. Mm-hmm.
They'll usually cover everything. VA will let them pay 4%, and Fannie Mae, Freddie Mac, or conventional loans, they'll let them pay 3%.
Up to 3%. Yeah. Okay. Yeah. So pretty much if it is conventional, it is most of the time the rule of thumb we are looking at 3%, and with FHA, up to 6%.
Well, I've seen FHA loans where the seller paid all the closing costs. That's come out of pocket a bit for those, but we're kind of in a seller's market right now, I think, in that regard. I'm just not seeing them willing to pay as much as they did in the past.
I think now if we'll start transitioning into buyer's market, and there are less qualified buyers, I think it will be in sellers' interest to agree to contribute and cover buyers.
Right, yeah, right this minute, yeah. Anyone that's got their house on the market right now is a motivated seller. Crisis, fees all over the place. So you got a house on the market right now. You're serious. You're motivated. They're much more likely right now to pay for closing costs.
Dave, the question is can you provide your contact information? And I will just type in the chat right now. So you can see all his contact. But Dave, you can give your phone number, please, so that
you can reach me on my cell phone anytime. That number is 678-628-3516. I know I've talked to at least one of you here before already. So a lot of you already have my information.
Mm-hmm. Yeah, and I just put in the group chat. So guys, if you see the group chat, you can see Dave's contact information here, or you can also reach out to me and I will be glad to forward Dave's contact information. My direct cell phone number is 404-886-0566. Any other questions because we are getting kind of to the end of our presentation. So it is time for you to ask your questions. Dave, Dave's cell phone is 678-628-3516. Okay, any other questions, guys? No. Okay, anything else, Dave, that you think we forgot to mention and share with our buyers?
Well, I think that we're pretty thorough there. I do think that I'd like to stress this too, is that anything we're looking at right now is going to be temporary. This is not like a normal recession that we've been looking at before that's caused by economic. This is been caused mainly right now by disease. We're looking at control. I'm hoping in a couple of months we'll get control. But the good thing is this is a temporary thing. We will get back to business as usual eventually.
Yeah.
But during this time, you may get lucky and find a really good deal on the home. Like I said, anyone that's got their home on the market right this minute is very motivated to sell, and they're very likely to work with the price more so than they would be normal.
Yeah, I agree. There are less qualified buyers right now, and sellers who are right now keeping their homes for sale, mostly I see they are motivated. I see we are able to negotiate some deals that we were not able to like a month or two before. It were like now what we can see, like it is definitely possible. So just keep that in mind. I am going to include in our group chat right now a quick video for you to review. I've recorded the market and analysis report for this month. And there is a lot of really good data and overview what we're going through right now and what we most likely should expect. And it is, the data is coming from Keep It Current. They are analyzing the nationwide information, and it is mostly like kind of real estate related. So it is just half an hour video. Highly recommend for you to take time and take a look at it when you have a minute. I think you will find it useful. Okay, so I appreciate and thank everyone for participating and joining us today for our buyer workshop, virtual buyer workshop. I need to learn this, adding the virtual part nowadays. So we are here to help you. Please feel free to reach out to us, and we will be happy to guide you through the transaction and answer any questions. If you know of anyone who is looking to buy and needs some help, would appreciate your referrals. So thank you very much for joining us today. I hope you are all safe, all your family members, everyone you know. Please be careful and use extra caution right now. It's very important. Dave, and I appreciate you joining us today, and thank you. So looking forward to continue working with you.
It's a pleasure. I like working with you and your team anytime.
Thank you. Thank you. Okay, guys, enjoy the rest of your day. Thank you very much.
Thanks, everybody.
Thank you. Bye-bye.